All right, so another crazy week in the markets. Stocks hit a new all-time high. We've seen 6,600 on the S&P. I wanted to get into that. I want to get into some Bitcoin news. First things first, if you get value, as always, please like and subscribe. Check out the links below. So let's get right into it here. The big news, I think, from this past week was the stock market. Bitcoin was up. We are certainly trending back up in the right direction right around 116 at the time of me making this video. But first thing, the big news from this past week also, inflation. Now, again, it did come up to 2.9, but the PPI number was down. I think it was at 2.6, which was lower than expectations. CPI was at 2.9, which is in line with expectations. So the problem with inflation is that some people view it as, oh, the Fed wants 2%, and if it's higher than 2%, they're not going to cut rates. They are going to cut rates, right? It's like a 98% chance or something crazy high like that they're going to cut rates. So they're going to cut rates. And I think it's pretty much like a 50-50 chance that we get back to back to back rate cuts, and overwhelmingly likely we get two. It all depends, honestly, on how inflation goes. If they cut and inflation goes back over 3%, they very well could pause again. But again, also have to keep in mind that if you look at the year after rate cuts, typically most of the time stocks go up, stuff goes up, right? So I think that I'm still bullish on the market, but I think we're overdue for a pullback. But medium term, as in the next, 6 months to a year, year and a half, even 2 years, I'm still bullish, right? I think we're overdue for a pullback. That's certainly true, but I've said time and time again that I don't think that the stock market is as overvalued as people think. And the reason for that is people are saying, "Oh, it's a tech bubble," right? People are comparing it to the tech bubble. And again, I'm not nearly old enough to remember. I was barely even alive during the tech bubble. In fact, I wasn't during some of it. But um, from what I know, a lot of those stocks, they weren't even making money. Some of those stocks, I don't even know if they had revenue. Like people comparing pets.com to Amazon, like these are completely different universes, right? So I think that comparing what's going on now to the tech bubble is, to me, it makes no sense, right? It's a world of difference. I mean, look at Nvidia, right? Nvidia, I think, clearly is overvalued, probably by, at least well into the double digits, right? It is quite overvalued. But you also have to keep in mind that Nvidia is printing like what, tens of billions of dollars in revenue every quarter. Like that is an insane amount. Like they're still growing like well into the double digits, revenue, earnings, you name it. So they certainly deserve a premium. It's definitely not the premium that they're getting, but they certainly deserve a premium. So I think that that's a mistake that people make, is that people think, oh, the stock market's way overvalued. And another thing that people think too is that um, now, some people acknowledge this, some people don't, but they say, oh, well, the stock market's overvalued, therefore you should sell, therefore you should go short. Number one, shorting is even experts barely get it right more than half the time. Arguably, they don't even get it right half the time. So I think that's a terrible move. But selling also makes no sense. Number one, because selling means you go to bonds with lowering in with rates going down. How does that make any sense? Technically, you could go to like, short term like corporate bonds. Maybe you capture a little bit of the upside, but still, right? That still assumes that you get the timing right, right? That still assumes you get the timing right. So, in my opinion, timing the market is just a stupid thing, right? And what I've said time and time again, the best way of going about it is to own the underlying indexes, own the individual stocks that you like, and sell calls on them. If you think that the market is significantly overvalued, simply lower how far out of the money you go when you sell the calls, right? So I say this time and time and time again. Options are an easy way to increase your returns over time, and not only that, to lower your risk, right? It's absolutely insane that more people aren't taking advantage of this. And it's not that complicated, right? I mean, if you want to look at like, butterflies, and spreads and some of the, that can get a little complicated. But covered calls, cash secured puts. That's easy. That's so easy, right? I mean, you can literally add 2, 3, 4% per year, and even more if you're trading a more volatile stock or a more volatile index, uh, per year on your returns simply by selling covered calls and just rolling them, right? You go in the money, you roll them, right? What I do is I usually sell about 2 to 3 weeks out. If it goes in the money, I immediately roll it another 2 to 3 weeks out, and I roll it so I still make money, right? It's so simple, it's not even funny. And like I said, it's amazing that more people aren't, it's crazy, sorry, that more people aren't taking advantage of this. So, long story short, when it comes to the stock market going forward, I think we still have room to run. I mean, we're going into a cutting cycle. We're going into a cycle to where they're rolling back QT, which is think something that people aren't really talking about. I think that, when it comes to tariffs, whether you agree with him or not, I largely disagree with them, but um, regardless of your stance on the tariffs, the one thing that's pretty undeniable about them is that tariffs aren't a permanent inflation. Typically, they're a one-time thing and it's over. Now, again, theoretically, they could implement new tariffs and that would start it all over again, but assuming that it is a one-time thing, it's not going to be something that we're still going to be talking about, a year or two down the road. And not to mention too, Republicans got, the midterms coming up. So I mean, it's frankly, it would be a stupid move of Trump politically for him to continue to do what he's doing because again, whether he likes it or not, it is hurting him to some degree, and that's going to hurt the Republicans in the midterms. So if they want to maintain their leads in the House and the Senate, well, they probably want to pivot to something else that people are actually going to like more and is less divisive. So again, that's what I think. But I still think when it comes to the stock market, we are overdue for a pullback. But I still like if someone told you we're at 7,000 by the end of the year, is that on the S&P? Is that the least bit surprising? Like absolutely not. But I mean, if we're 20% lower now in 3, 4, 5, 6 months, that also is not surprising. So that's the thing when it comes to going short is that it really makes no sense because we could run up another 10, 15, 20% before we get to 20% pullback and you're right back where you started and you wasted a whole bunch of time and effort to get nowhere. So like I said, the key in my opinion is to sell covered calls and just be a little bit more aggressive in how you do it, right? Try and harvest more premium. Use that to build your cash position if you're desperate to build a cash position. But the one thing when it comes to bonds, and the reason that I always crap on bonds and cash is I think that inflation is here to stay. I think the days of, the 2010s where we had like 1% inflation is probably gone. It's probably gone. And another thing is the government can't afford rates at, 5 plus 5, 6, 7, 8%. Like they just can't afford it. They just can't afford it. So what's going to happen is they're going to have to keep rates low, but they're going to have to spend a lot of money, which is going to drive inflation, which means the only way to escape the inflation is number one, Bitcoin, which is the best option, but number two, stocks, to some degree real estate, but mainly stocks, right? So that's why I'm fully invested right now, even though we're at all-time highs. I'm as fully invested as I've ever been, to be honest. I'm fully invested. So that's just my thoughts. Obviously, I could be completely wrong, but that's just my thoughts. So let's get to the next thing here. Kazakhstan's president has ordered the creation of a strategic Bitcoin reserve. This is huge. So again, the dominoes are slowly falling, right? The dominoes are slowly falling. Again, a lot of people are disappointed that Bitcoin pulled back, but I mean, we really only pulled back, what, like 10, 15%? I think we still have room to run, given the fact that we're going into a cutting cycle. I mean, if we're going into a cutting cycle, liquidity is going to go up. Like, there's no reason that Bitcoin shouldn't go up. You look at the best months throughout the year are October, November. October averages like 21%. I think November averages even more than that. So I think that we're still going to hit 150 to 200 by the end of the year, maybe higher. I'm not ruling that out, but it could be lower too, but I still think that 150 to 200, let's leave it in the middle. 175 probably is where I would set that over under. I still think we have a lot of room to run. And I mean, look at gold. Gold just keeps ripping, and Bitcoin is better than gold, right? Only a matter of time until people figure that out, right? So I think that we still have quite a bit of room to run on Bitcoin, to some degree the stock market, but I think Bitcoin especially. This is a very interesting chart here. I always like to bring these things up because when people poo-poo Bitcoin and talk down about it, it's things like this that really just shut those people up. So this is the iPhone priced in Bitcoin, right? And they start with the iPhone 4S. This is the first smartphone I ever had, probably the first smartphone a lot of people ever had. 48 Bitcoin, 47.9, right? That is that's about $5.5 million. I just paused it just to look that up. That's about $5.5 million. And the iPhone 4S came out in, I believe it was like 2010, give or take. So we're looking at about 15 years, give or take. You'd have put whatever it was back at the time. I can't imagine it being more than, two, $300 to get an iPhone 4S. Maybe it was more than that, but you're looking at $5.5 million, right? Even the iPhone 12 zero point zero 0.06 Bitcoin, right? That's still about $7,000, $8,000, and that was 4 or 5 years ago, right? So you even the iPhone 15, right? That's $4,000 or $5,000, right? So people don't realize just how much that your purchasing power is being destroyed because the government is the people running they're either incompetent or they're greedy isn't the right word, but they're the, let the money printers go hot, money printer go burr kind of thing. This is the problem. The problem is not capitalism. The problem is not corporate greed or the rich people or anything like that. The problem is the governments refuse to run balanced budgets. They refuse to spend in a responsible way. And the best way to escape that is Bitcoin. This chart is not going to be any different, right? The iPhone 7, 1 Bitcoin. That's 10 years ago that phone came out. 1 Bitcoin. That's $116,000, right? And that's US dollars, right? In Canada, that's $160,000 for us, right? That's the down payment on an average house, right? So I don't think people realize we are getting screwed, but it's not in the way people think. And not only is the good news is there's a way to escape it, and it's Bitcoin, right? There's a way to escape it, right? So the people that complain about inflation, about cost of living, like honestly, I'm at the point where frankly, I don't care. I don't care. Number one, because a lot of these people vote for the policies that lead to it. But number two, there's a way to escape it, but again, you got to be disciplined and you got to be willing to. And a lot of these people just aren't willing to admit they're wrong about anything. So yeah, there's a way to escape. It's Bitcoin, but people don't want to do it. So next story here is from Jeff Walton. If you like MSTR at $500 with 331,000 Bitcoin, not sure why you wouldn't like them at 330 with 638,000 Bitcoin. And again, this is a very good point. A lot of people would say, "Oh, they were just way overvalued back then." I think that's partially true. I think they certainly, obviously, they were overvalued back then, but I also think they're undervalued right now, right? I really do because if you look at their MNAV, it's as low as it's been since basically since 2022 back in the bottoms there, and we're in a bull market. We're not in a bear market right now. We might not ever see a true bear market again, but at the very least, we're still at worst case scenario at the tail ends of a bull market. So I think that we still have room to run on MSTR. I think they're an obvious buy right now. Just my opinion, though. And then another thing I wanted to bring up here is this is the Satoshis per share when it comes to MSTR, right? So if we pull this chart up, this chart goes back to the last quarter of 2020, so almost 5 years. And I mean, that quarter they had about 40,000 sats per share. Now it's right around 200,000. right? So a lot of people are talking about, oh, they're diluting, they're hitting the ATM too much, and it's like, I don't care if you're hitting the ATM. I care about this number, right? This is the only number that matters. I mean, you know, your MNAVs and Bitcoin yield and stuff like that matters as well. But this is the most important thing, right? This is the most important thing. And this is the thing that people don't seem to realize is that if you have an MNAV of 1.5, that means that if you buy it, let's say you issue $100 million of debt, you can get $150 million worth of Bitcoin with that, or whatever number you want to take it up or down to. And this is the thing that people don't seem to realize is that when you're trading at a premium, you can issue debt and you can buy more Bitcoin than you're actually issuing as far as in fiat terms. So this is why this number keeps going up. And this is why this number is never going to stop going up over time. Now, again, it'll have ebbs and flows, but it's not going to stop going up over time because the value of Bitcoin is going to continue to go up at a higher rate than inflation, than the debt that they're taking on. And it doesn't matter. And it's what I've talked about time and time again as well, is that if you look at Stretch, if you look at Strife, if you look at Stride, if you look at what's the other one I'm missing? Strike. Uh, again, a lot of people are calling it their iPhone moment, and I really believe that, right? That we're going to look back at this and be like, this is one of the most genius things in the history of finance, what they are doing right now, because they're quite literally, number one, they're solving the big problem with money market accounts, with savings accounts, with bonds in general right now is the yields are not high enough to actually keep up with inflation, right? That's the big problem. You're still losing when it comes to real inflation. But when it comes to SDRC and STRF specifically, you can get that, very little volatility return while getting a 9-10% yield. And the good thing about that for MSTR is that MSTR can borrow at 8, 9, 10% and get an asset in return that's going to return 20, 30, 40% over time, which means not only are they paying people this amazing yield to borrow, they're literally printing cash, right? Because again, if you can borrow at a lower rate than you can get returns, it's literally free money. Like it's literally free money. And it's not going to stop because over the long run, Bitcoin's easily going to return, well, well into the double digits, well into the double digits. So they're not going to have any trouble paying off this debt, and they don't have to pay off the principal. They just have to pay off the coupon. And people say, oh, they're taking on all this risk, and this is the last thing I wanted to leave it on here. Mortgages are 5 to 1 leverage, big banks 12.5. Strategy is the exact opposite. It's actually 1 to 4, right? So again, when you take out a mortgage, right? When you take out a mortgage, you want to buy a $500,000 house. Typically, they're going to make you pay $100,000 down, right? So you're only putting up 20% of the collateral, right? You have an LTV of 20, right? That's pretty bad, right? That's pretty bad. There's quite a bit of risk in that. Strategy is doing the exact opposite. Strategy has an LTV of like, 500, 1,000, right? And a lot of people are comparing what they're doing to, FTX and whatnot. And FTX they were borrowing money with leverage, right? So they would put up FTT token, like let's say they put up 100 million of FTT token and they're borrowing $1 billion on that. Number one, that's the exact opposite of what strategy is doing because strategy would put up $1 billion of Bitcoin and borrow 100 million, not the other way around. And not only that, Bitcoin is the best collateral on the planet. FTT is virtually worthless. And this is the thing that people just don't seem to realize. And the one of the podcasts I listen to quite a bit, they're still got again, they're slowly coming around to Bitcoin. I mean, 2 or 3 years ago, they were like Warren Buffett, it's rat poison squared. Now their position is, oh, if you want it to be 1, 2, 3, 4, 5%, they're okay with that apparently. But they still believe this FUD about strategy that, oh, they're taking on debt and they're just blindly issuing shares. And depending on how you look at it, technically that's true, right? Technically that's true, but they're not doing it in an overly risky way, and that's the thing that people don't realize is that they're not doing it in an overly risky way. The one concern that concerns me about this is for something to happen in life, right? Like for something to happen in life, something I've noticed is that whether or not something is true doesn't matter as much as people think. The thing that matters the most is what do the majority of people think is true? Even if it's completely wrong, if the majority of people think it's true, that's how society is going to perceive it. So honestly, this is one of the biggest concerns I have with Bitcoin and I have with MSTR is that whether or not it's Bitcoin is great, whether or not MSTR is great, that's not the most relevant thing. The most relevant thing is what does the average person think, regardless of the reality behind it. So that is something that concerns me. But I wanted to point this out because this is the proof. And again, it's not like you needed me to tell you. I just wanted to go over it because it's so important. Is that they're not using excess risk, and if their debt was rated, it almost certainly would be as high as you can possibly rate debt. So anyway, I've made this long enough. I'm going to leave it there. So like I said at the start of the video, if you got value, if you liked it, please like, subscribe, comment, check out those links below, and stay tuned for more.